Hello, welcome to Strategy Recap. Today is September 20th. We're going to go over crude oil. Crude oil is in a bear trend market state condition. Bear trend has an expectation of lower move lows, lower move highs. Attributes are it's a trending market, negative bias, good volatility. Part of the condition, there are pullbacks. And one of the tells in a change of state is a break in structure. For the structure, we have the R level above the market, above the upside pivot at 44.95. So this is the real selling energy of this bear trend. And our downside pivot is the breaking point is at 42.89 in crude oil. On our market color analysis, we have a market that's generated a sell signal in our moving average system, and all of our other trending systems are negative, red, but we do not have a purple X, so we don't have a good follow-through potential to the downside. Just kind of looking at the trend of the MC value, we kind of pushed it to the edge, and we pulled back just a little bit, and we're lacking that ability to trend. Strategy-wise, the optimal strategy is to fade momentum into the R level at 44.95, and then we can put some leverage up on that if we get a sell UP reversal strategy. And on a hedge strategy theme, if we see an exhaustive signal off the downside pivot, and then a break in market structure above the directional, and that would target the R level, which would ultimately be a rally to sell. I want to point out a condition that's typical in markets that are trending, that have sentiment above the market. The higher above the market, usually the better the signal is. But you've got a market that's trending, and it breaks underneath the directional. And that's the directional becomes the key point, because the directional is the classic pivot. Below this price, the market should maintain structure below the directional and continue lower. And if it can't do that, this is the tell that we have a structure break. And what will happen typically is the market will either go into a kind of a violent digestive action and coil, or you'll have a transitional trade and the market will try to make a play for that R level. And so that's why we have it as a hedge strategy theme, where it's a buy DIR breakout strategy. But this is typical of any trending market with sentiment far away. As soon as it crosses the directional, that becomes a hard trigger that says this momentum is broken and we're either going to digest or we're going to have a move higher. And even after this break in structure, if the market does make a new move low, it's typically false. It's not going to follow through. Even if it comes down to these levels here, your expectation is it's going to stabilize. So here's the price action in crude oil, where we have, early session, we've got a market that's trending lower below the directional. And we're watching negative price action here. Nice bear trend. Get a little bit of a push here above these highs. We didn't break the metric to the downside. And this is the CR minus. Then here we're getting a push through the metric, and we come back up through it. So this is a bit of a tell that this momentum's slowing down. Then we get some follow through. They build structure here and come down, and they test the top end of the DP alert distance. And that's all we need to get is a test of this area, and we just hit it, just the top of it, and then we get a confirmed structure break. They base above it, and this is really the tell that this bear trend momentum, there's an issue with it. This negative momentum that the market's had is stalled. There's a problem here. And so the expectation is absolutely we're going to get a play for the directional here. And then when we take it out and get above these metrics, it's confirmation that the negative momentum of the bear trend is broken, and we're either set for a digestive trade or we're going to see a transition back up to the R level. So I've cleaned the chart up a little bit. Just want to go over some market metrics. So we have our variance. I darkened the background up here so we can see the metrics coming here. Here's our variance. Here's a downside pivot, variance around the directional. And now I'm going to put in the alert distance. So we can see, as we broke structure, we attained, a full APMD, full average price map distance. We attained this. Also, now I'm going to put in the maximum stop distance. So this is going to show up for the major price map levels, the directionals, and the target levels. And here the market breaches the maximum stop distance on the upside. This trend, if it's going to really get excited, should really start to scale. It doesn't. It fails, but we do hold the maximum stop distance as we pull back here. Now I'm going to put the minor levels in. And so, this was an interesting setup here. Is the market ready to go? It holds this. You can see this small price action here and here, aligning with the metrics. This should base and go. It doesn't. It fails. So this is a tell that we're falling back into potentially a non-event sideways session. And the market comes back down, stabilizes above the CR minus, does not take out the maximum stop distance, and all of a sudden it gets back above the directional, which is a sign of strength, and bases above the metric here. And so this is a new positive signal, and then coming above the metric here is positive. They give you a little bit of a squeeze, and then ultimately the hedge strategy plays out. So difficult day, but the market did provide us with some the tells that what it wanted to do. It had this negative momentum, bear trend action. Started to break that structure here, which is a tell that things are slowing down. So this takes away the energy of the negative momentum, doesn't discount it, but you'd expect more maybe stop and go and not more of a scaling release. Then here the market confirms, no, the bear trend momentum is broken. And we're either and so that the optimal strategy theme is no longer true at the moment, and we're in a hedge strategy theme. Could shift down into a non-event, but it pays out a full APMD, so it brings us back up to this level here, and that's your money. Comes back down, does digest for a bit, and then re-engages the hedge strategy theme, and ultimately attains the R level. So the key here is being somewhat tenacious with the theme, not thinking, focusing on the facts. Fact is the bear trend was broken. And we know when a trend is broken, that means it can either make a play, and especially within this structure, it can make a play for sentiment, or we can digest. And the market did a little bit of both. We made a surge towards sentiment, fell back into a digest, and then our underlying expectation is not that this negative momentum is going to potentially re-engage, but our expectation is that this positive hedge strategy theme is going to re-engage, and it does. For more information, please contact us at info@jsservices.com. Thank you.